Welcome to TradeSpoon and YellowTunnel. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon and YellowTunnel, and today we're going to have our weekly discussion of the mechanics of the pick and where the market is heading in the next couple of weeks as we approach a Fed decision on interest rates, on an escalation in the Middle East. Disclosures are very important. Please read them. You can always pause the screen if you need more time to read the disclosures. Right, these are some of the tools I'm using to come up with a trade idea, seasonality, our model, stock forecast toolbox. Let's take a look first at the stock forecast toolbox. Model is continuing to turn negative. Basically, S&P is trading below 50-day moving average for a few days. Model see continuing pressure as the Middle East war escalates. Assuming there is no new information in terms of geopolitical risks or interest rate decision, then the path of least resistance is to continue going lower. This is a 10-day forecast that gets updated every day, right? You can zoom out to 6 months predictions, and this is a long-term view. Model still shows positive momentum that the long-term trend has not been broken. Model does see potentially market reaching 730. We're within 1% of that level. So we're approaching oversold levels, but we're still not oversold, right? I mean, potentially we could get to 700 level. So the path of least resistance is to continue going lower, but we are approaching oversold levels. A lot of it will depend on crude oil. Crude oil continues to grind higher. There's more escalation in the Middle East. I think Brent got to 100 over the weekend. A lot of it will just depend on the geopolitical risk. If we can find the path of de-escalation, I think oil prices will revert back and drop, and then the market can find some footing. Otherwise, 10-year continues to grow and higher, 2-year continues to make new highs, and this is bearish for the market. One way to hedge is model start picking up again energy names as energy companies continue to trade higher as a result of escalation in the Middle East and potential full or partial closure of Red Sea, straight of another path through the Red Sea for the energy tankers. So DVN, model picked up DVN. I'm going into next, not this week, but next Friday expiration 44.46 call spread, risking $1 to make $1. So $2 spread that expires 2 weeks from now, 44.46 call spread, risking at $1. You can find more signals in Active Trader every day the model runs, and we provide up to 3 bullish, bearish ideas using stock or option trades. So if you need more signals, this is the place I would look for them. Longer term signals are here, weekly trader, monthly trader. They're getting updated once a week on Sundays. All right, that's all I have for today. All eyes are interest rate decision, assumption that there won't be a rate hike this time around in July, maybe either September or December. But again, a lot of it will just depend on energy prices. So this week, assume there'll be more volatility. Thank you very much and have a great day.